Hello, guys. Welcome back to another edition of the Weekend Market Analysis. We had a pretty eventful week given Friday's price action, Friday's drop that we had in the market. We saw some decent volume come in. We saw a downtrending day where the bulls stepped in at the last minute and saved the daily trend line break. And we'll go through other indices and we'll see they saved the daily trendline break on every index. So how I'm looking at this right now is we've clearly had a high volume reversal day that you can be short against. This is exactly the sign and signal that we look for in a trend change. It's the earliest signal that you can look for a trend change. As you can see, we have not had an actual uptrend break yet. So this next week is going to be very, very pivotal for the market. We have a huge week of earnings. We have many huge names reporting next week, and the market will be volatile. It will move. And regardless of whether they save the market and go up, or in my opinion, what I think will happen is we will go into a downtrend. I think we could see a gap down in the market when futures open Sunday. And this is all speculation, of course, right? And it's just based on what I've seen on Friday. I saw a change in the nature of the stock market, right? I didn't see just a pullback. And we'll go into an hourly chart here and just break down this week's action, okay? So here is this week's action. Here's what I was looking at as the week went on. So, right, we were fine. We were all bullish. I explained in last week's video that we saw bullish signals, and so to no surprise, we continued kind of just grinding higher. Now the first signal of weakness I saw was on this day here. We broke out to new highs, and what did we do immediately, right? Normally when you have a balance range for 2 days like this, and you break up, you should be holding that range, but immediately the next hour, we break below that range. That's not good. Right? That's an immediate sign that the breakout is failing. And it goes on to try and break out one more time, right? But no, the bears keep pushing it back down. The bears are in control on this day. And so that's the first hint, and we close the day basically at the gap, right? That's a gap and crap. It wasn't very high volume. It wasn't incredibly it wasn't a huge change in the nature of the market, but that's something we have to keep in mind. And if you go over to some of the market leaders like small caps, you'll see on that day, the small caps closed below their gap. They had already been coming off of their trend line and making lower lows and lower highs. So that's something that we definitely should be taking notice of. Right, that was a very early signal this week with the transports and the IWM. They were already rejecting their trend lines. We noted last week that although the price action was bullish, we had to be aware that neither of these market-leading indexes, neither of them broke out of their major trend lines. Here's the DJT. We noted that it had not broken at the end of last week, and here's the IWM. And we noted this one also, right? We noted this one had not really broken, and it was actually retesting a downtrend line that was very well tested and that had not been broken back above. And we had to note that although the price action was bullish and it was a breakup, we had to be aware that next week could potentially bring downside if they were to reject those trend lines. And that's exactly what happened. Those were the early warning signs to be watching in the middle of the week. So just back to the SPY, breaking down the hourly. Again, I've had these levels on for quite a while, and we talked about this level, right, being the first real breakout area. We had a gap where we could not come back. And so whenever something gaps and does not come back to fill the gap right away, always keep in mind the opening range low, which was this 329.50. We can see we had quite a nice rally off that level. And then we had this breakout area here, which is essentially the bottom of the breakout area. It's where the market broke up from. And so that will typically provide support as well. On Friday, that we really had some strong selling. They even faked people out. They went and closed below that gap. They ran it up at the end of the day. And that's kind of what happens in high volatility markets. A lot of times they'll make it look like it's going lower, and then they'll run it back up, fake everybody out, close okay. That's pretty typical, especially at the beginning of a down move. And when you've been downtrending all day, it's typically not just going to shit the bed and keep on going. That's typically what would happen more in a bear market. And bull markets, you're normally going to get more of a dip buy. So that's what happened. They closed the day above the trend line. They closed the day above the gap. But regardless, we had some high volume, and I see this as a poor close. Now, why? The main reason is because intraday here, we came and we tested the top, right? This 328.65, and you can see here we rallied up a bit the next hour. And I was expecting this rally, honestly, to see a bit more higher highs. I was expecting to maybe test this trend line, the top of this breakdown candle, and we couldn't even get there. We couldn't bounce at the gap. They pull it up and finish above at the end of the day, but we close near the gap. We close near the bottom of the breakout area. And although we've held trend lines, that is a sign of weakness. It's an early warning sign. If we see a gap down, or if we see the market just continue on Monday to trade in a range around this zone, maybe slightly higher, it's always possible when a downtrend begins and volatility expands that you see large swings in both directions, although the trend is still going to be down. So I wouldn't be surprised if we did see a rally, maybe up to this trend line, up to this breakdown candle high, and then we continue lower, or we could get a move in the form of a gap down when futures open, and maybe this thing opens back under maybe even Friday's lows. And so there's a few key levels here I have marked that we're going to be watching for bounces. The first is going to be a gap right here, and just below the gap, 325.71 right here, you're going to be looking at this massive zone. There's a massive zone here, and this is where I expect the market to absolutely see a rip your face off rally. Not necessarily that goes to new highs, I don't know for sure, but definitely a rally that will be a nice rally to buy intraday. Why? Because you have two pivots here. Look at how much trouble the market had breaking through this area. Look at how much trouble it had, right? So you have pivot here, pivot here. Look at all the touches we had on the bottom of the zone. You have a break up candle. You have the market rejecting right here and closing and gapping. So you have an open gap left here. There's an open gap just above. And I know this is a big range here. But the lower it gets into this range, the better buy it is, right? This is one where you could maybe add a partial position as it gets lower into the range. But this area, this 320, high 323s to 325, it absolutely will see support. There's no way the market's just going to run straight through this zone, right? And then if we go to a daily chart, if we happen to just see a very strong downtrend this week, there's this very, very critical area. This would be a spot where I think the market could actually turn around and continue back into an uptrend. Of course, we have to see that in real time. We have to see a high volume reversal intraday taking place at this level, just like we saw on Friday, you see a high volume reversal bar that closes below the gap. That's a huge signal of weakness. And if you're looking at other markets, you see the same thing. Certain markets were showing extreme weakness in the first hour of Friday. So that's the same hint you have to look for when we're coming into these levels to know if it's going to be a longer lasting bottom or not. But yeah, this has a weekly, this weekly trend line, this dash trend line is also going to come in around what? A really pivotal breakout area, right? 320, we hovered around it, went above it, holding it, we come back and test it once, test it twice, and boom, we take off. So there's a nice breakup candle low. There's a weekly trend line that we could retest and find support before continuing higher. This would be a really end all be all. I would think the market would continue back on an uptrend if it happens to reach this level. Now, that might not happen this week. It might happen this week. We just have to see that in real time. Now, the other side of the coin is that we continue up. Nothing's wrong. Nothing's actually broken their uptrend yet. And we continue higher. Now, what really has to happen is we have to close above Friday's highs. I mean, people are going to be selling against this drop, right? Any rips, they're going to be selling, I guarantee you. A lot of people have now turned bearish because of this, and rightly so, right? We've had weaker looking markets, and we'll go through the indexes and we'll look. But in order to be back bullish, guys, we have to get above these highs. And so I'm personally not interested in going long on the broad market here whatsoever. I would want to wait and maybe go long in a small position here, maybe a bigger position down here. And so that's just my advice, is that you guys play this out patient, see how it goes. And yeah, that's it. So we'll take a look at weeklies real quick. Right, weeklies, we've had a nice red candle. We are still inside of last week's range, right? But we have peaked above, and we've seen some good downside. But really nice. I mean, you can see my levels are based around, okay, there's a weekly breakup candle low, right? So that's going to be a big level right there at 326. This end all be all, where we should bounce, is a much better weekly breakup candle. This one had 2 weeks of inside consolidation, and then boom, breaks up. So that's a big area of structure. Again, that 320.36 should be very nice support. We'll go to the other indices real quick. IWM, same thing. You have a breakup candle, but you have a decent rejection. Again, no uptrend break. You have you don't really have anything that's super bearish on this chart. You really don't. But what you're going to have is you're either going to have an inside week or you're going to see more downside, depending on how futures open and especially how these earnings play out. And it can really go either way, guys. But I guarantee you people are going to be looking to play this short. And that doesn't mean that it has to fall out of the sky and drop to zero, right? We still have this massive breakout area. It could just be a simple couple-day downtrend. It happens pretty quick, and we retest our breakout areas and we go on our way, right? The whole market is still looking rather bullish until we see more signals, maybe this week or next, that we would actually be going like bearish, right? This is just a pullback in an uptrend as of now. The XLF, the financials. These ones are interesting. We got a break above the all-time highs, like I noted last week, and I said that they could probably run. Well, we didn't. We did not get any upside in the XLF, and I said that a monthly close would be better confirmation, and so we haven't gotten that yet. And we've actually pulled back to what this zone, this breakup zone, this former pivot. And we've held. So again, nothing really wrong yet. But we have come back under this trend line. That's a failed breakout. That had many touches. So that's a failed breakout to me. that's definitely showing weakness. And when the financials are showing weakness, that's when you know the market's starting to get in trouble. Okay. The transportation average, this one looks the best. I think it got the best weekly close. But again, we are under trend line. All we really did here was retest this red zone. But again, until we've really broken out of this clearly important to the market trend line, right? Very important to the market, you can see. Until we've broken above that, this thing could be in trouble. And this is all, we just have to watch early next week. Daily chart, look at that, we're holding up trend still. There's nothing technically wrong here. We had a pretty nasty reversal candle, but if we just continue like this, kind of just grinding higher, just riding that trend line, that's very, very bearish. The DJT needs to see upside quick next week if it's going to recover from this. It's got a big zone here. It's got a gap on this day, and it's got a breakdown candle high. So that zone there, if we just grind up kind of like this, riding the trend line higher to it, watch out for that trend break, right? That's probably going to break. We just have to see if we can get back above and close above that breakdown candle and back above that gap. Something else is going on, and we're looking more bullish, watching for that trend break. Okay, the SMH, this was kind of the odd one out. We talked about the SMH. We talked about the SMH might likely getting some upside. We had a weekly breakout of a range, and we got that upside. Intel reported earnings. Intel beat very well. We saw gap ups. I was playing some of that. That was a nice couple trades there. I was in AVGL, Broadcom, and Nvidia. And when Intel reported, they both shot up nice. So that was beautiful. The SMH has been doing well, but the SMH, just like the other indices, we've had a pretty high volume. This one was higher volume than most. High volume reversal. We closed below the gap, but what? We're still holding, right, the most recent breakout area. So there's nothing technically wrong here yet. We haven't broken any uptrends. We're simply pulling back. And so again, with this sector as well, Monday, Tuesday, Wednesday, very critical. Do we gap down on Monday? Do we rally? And then if we're rallying, we have to keep an eye on where we broke down from, right? We have to keep an eye on this pivot, breakdown candle highs, right? This is not going higher until we close daily above these highs. We can't assume that it's going higher because we've had very high volume reversals. And so we just have to be careful. This is a lot different than a pullback that's very easy to buy at a support and say it's going higher. There's going to be sellers that jump on board. And then quick, let's just look at the Qs. The Qs look the worst to me. Why? Because we had this trend line pop barely above last week. I thought that was very bullish. I thought we could go absolutely parabolic. But we've had a jab, we've had a recapture, and we've had a bearish doji. And likely the Qs would come test their last breakout area, which on a weekly you can see here it is. We kind of struggled, and boom, there's the breakup. So somewhere in that zone there, 212 to 214-ish, 215-ish, that's likely where the Qs would pull back to. Right? They've kind of just grinded up, and there's that breakout area I was talking about. You struggle, you kind of struggle some more, and boom, you finally break up and go. And obviously below that, there's a better breakout area around this zone here, around 203 to 205. So the Qs do not look good to me at all. Pretty high volume there. The Qs look like they will absolutely see some downside. You really have to get over again Friday's highs for that to change. Okay. Yeah, so I mean that's pretty much it, guys. I am looking for more downside in the market. Although we haven't had any technical breaks yet, we closed pretty poor near the lows. Any rallies, be wary. Be wary until we get back above Friday's highs. I would be very careful. Maybe choose your sectors wisely. I'm not sure if there's any sectors really looking that good. Real estate could do well. You've got energy here that is just holding support. Sometimes energy likes to go when the market goes down. Keep your eyes on energy. Yeah, you just don't have too much else looking great here, guys. Watch materials for a trend break here and short. That could be a nice play. Look at different material stocks and find ones that are bearish as well. That could break down early next week and be nice. Let's look at the consumer discretionary stocks. That looks terrible. That's an ugly candle there. So look for that to potentially retest this breakout area. You have an uptrend line that will come in right about there. And then you've got your triangle breakout area just below that. So look for consumer discretionary stocks to see downside. You've got communication services. These kind of in the same boat, right? They haven't had any technical breaks, but we've had a solid breakdown. And usually a solid breakdown like this won't just get bought up. There will be sellers that will show up. Of course, we are in a ridiculous uptrend, so we have to wait and see. Monday, Tuesday, Wednesday, this week is going to be massive for the market. Healthcare looks pretty bad. Again, though, we've held and tested right this trend line. We've got a few touches here. We broke that really steep trend line, came back, tested. We tried to make new highs, and we've rejected. I'm pretty sure the weekly candle would look rather ugly. Yeah, that's a pretty bearish candle right there, guys. And even if we do end up rallying next week, this is probably going to head back down to that trend line, maybe even fail this breakout. We have to wait and see again, but that's a pretty ugly high volume on healthcare. Not looking great. Consumer staples definitely going to see downside. This one is failing to get back into the upper zone of its channel. This one, yeah, this one's seeing downside. It doesn't have to happen Monday. It doesn't have to happen Tuesday, but it's not looking great, especially if we break below this breakup candle low. You're looking to come test the next one, test the bottom of the channel. Not looking great there. I'm not really liking that. And lastly, utilities have been the hot sector. Called this out like 2 weeks ago. Where are they going to stop? I wish I knew. I mean, you've got possibly a trend line you can draw, and look at that. We've broken it. So are we going to fail that breakout? Maybe. I'm not sure. Right. I mean, this is on a massive rally. I wouldn't be getting in the way of utilities. They can certainly use some consolidation or pullback, but this continues to be the hottest sector at the moment, and it will stay hot until it wants to be done and puts in a signal like the rest of the sectors have. All right. So that's going to be it. Hope you guys enjoyed. Please like and subscribe, and I'll see you in the next one. Peace.